Hello, this is Simon Thompson, Vice President and Wealth Advisor at Texas Legacy Wealth Management. Welcome to our monthly market update for October 2015. We're going to walk through the major market events of the month. The month of October brought a much welcome change after a tough August and September, as we saw the S&P 500 rise 8%. The rally from the lows at the end of September has helped boost sentiment as the S&P 500 saw its best month since October of 2011. Many factors propelled the market higher, including the much anticipated start to earnings season, which has thus far supplied better than expected third quarter earnings. Some of the same concerns are present, such as a lack of global growth and the timing of interest rate hikes in the U.S. However, with earnings season starting, the market put those concerns aside and focused on fundamentals. The aforementioned earnings season has thus far been more upbeat than many expected. As of the end of October, 72% of companies have beaten earnings estimates, while 43% topped revenue estimates. The best performing companies have been in the consumer discretionary, technology, industrials, and healthcare sectors. As we look to Q4 in 2016, forward guidance for consumer discretionary and healthcare have held up the best. One sector that's waiting for an earnings boost is the financials, as many of the banks may benefit from better net interest margins once the Fed begins to raise rates. After the September comments from the Fed, expectations for the first rate hike were pointing to 2016. While 2016 still looks possible, the October Fed statement suggested a December rate hike may still be on the table. The Fed signaled more optimism about the economy as they downplayed global growth concerns and made it clear that if fundamental data support it, a December rate hike is still a possibility. As mentioned earlier, many investors have been concerned about the potential impact of slowing growth in China. This is evidenced when we look at the number of mentions of China during earnings calls for the third quarter. As can be seen here, for the first third of earnings season, analysts and companies are talking about China much more than in previous quarters. A deeper read of earnings shows that in many cases, the Chinese consumer continues to provide substantial opportunity for many companies. The Chinese central bank continued its efforts to jumpstart the slowing economy with the sixth interest rate cut in a year. Combined with the European Central Bank's message of more stimulus to come, overseas markets continue to look to central banks to drive growth. The big question to answer once again is whether we're coming out of a bull market correction or if we're potentially seeing the start of a longer-term bear market. Last month, we suggested we were most likely seeing a bull market correction. And while it will take time to tell whether our expectations were accurate, being invested over the last month has been beneficial to investors. Moving forward, we remain optimistic that this bull market continues to have room to run. However, if you have uncertainty or have felt uncomfortable during the recent volatility, now is a great time to review your overall asset allocation and make sure that your portfolio is built with consideration of these types of periods. For more information about Texas Legacy Wealth Management, you can contact us via phone, email, or feel free to visit our website. We would also like to remind you to follow us on Twitter and like us on Facebook. Thank you.